I got some questions for myself as well.
Right.
So first of all, the one thing that as I was like preparing for this interview, I was studying is different type of like what is it called? It's different type of like business tax types, I guess.
Mm-hmm.
Like an LLC is a tax type, right? But then you have something like a MLLC.
Okay.
And then like a S corp and like a C corp. Can you explain the difference between all of the tax
For sure.
types?
So typically most people are just walk from the bottom up, right? So most people do sole prop. Sole prop is like, hey, I'm just doing business in my name, right?
Mm-hmm.
So I'm Mr. J. Hill, operating as Mr. J. Hill. I got nothing set up with the Secretary of State. Simple enough. Don't recommend it, but simple.
Okay.
LLC stands for Limited Liability Company, right? So we actually went to the Secretary of State website and formed a business, Limited Liability Company. You'll have something that'll have your name. So like Eagle Financial Group, LLC. And then typically those are single member or multi-member.
Oh, okay,
right?
That's what the M is for.
That's what the M is for. So single member means it's just me. I'm the only owner of the business. Multi-member means it's at least more than one person who owns it. So it could be me and you. It could be me, you, and two other people, right? And so that makes it multi-member. Multi-member automatically forms what's called a partnership business.
Okay.
Automatically. Then you have S Corp. S Corp stands for Small Chapter Corporation, meaning I just took my LLC, or I just took my LLC and said, hey, I want to be taxed as a small corporation. And so it allows me to do separate tax returns. So my business will have a tax return, and then I'll personally have a tax return, and I'm taxed as a small corporation, meaning the taxes flow down to me. And then there's C Corp. C Corp is your big corporation. So typically when you think C Corp, I would just think public company. Any public company, Apple, Walmart, you want to think C Corporation. So that allows you to, you got a separate business. And this is where people say, oh, I might get double or triple tax because the business pay taxes itself. Then you as the shareholder pay taxes on dividends received. And then if you are a C Corporation, you're going to be on payroll. So now you got the W-2 that you're paying taxes on as well.
Now, I know we said Apple, Walmart, things like that. So that's a C Corp. Give me an example of somebody that I can talk to personally, or somebody that I might know that might have a C Corp. Yeah. On a smaller level.
100%. That's a good question. Without actually knowing all the ins and outs about his business, but from somebody like him, 500, I would have a C Corp.
Wow.
Just from the appearance of it, just make it seems like, and like I said, I don't know his net worth, none of that stuff. But if we're bringing in millions of dollars, the C Corp might be the best option. Number one, you get to maximize benefits from the shareholder and employee standpoint. And number two, you're going to pay cheaper taxes because the corporation pays the taxes on itself. Right now, it's at 21%.
Okay. But why that and not an S Corp? Because I was under the understanding that the S Corp gives you more benefits as well. And then I guess it's like, I don't want to say never, but like we was just talking about, my friend said he got hit with an audit, but like an audit. But an S Corp, like it decreases your chances to get hit with an audit by like 70-something%.
100%. So let's break it down. So the reason that is because if you just have a limited liability company, LLC, what's happening is when you file taxes, you're doing it on a form called a Schedule C that's attached to your personal taxes, the 1040. So so that means if I do your personal taxes, I'm gonna say, hey, what's the business name, what's the income, what's the expenses, and I'm doing it on a form called a Schedule C. The reason why that gets audited so much is because most people use the Schedule C to commit fraud. So this would be like I'm putting down expenses on my Schedule C so I can draw down my income so I can get a refund or don't owe as much. And so that's why those are highly likely to get audited, because that's where the most fraud happens. Now, when I go S Corp or partnership, it's less fraud in there, and the reason why it's less audits is because the IRS really haven't put a lot of funding behind those departments to educate themselves on checking out those taxes. However, that's changing. but is less likely to be audited because you're not doing business on a Schedule C. So now my S corp has its own tax return that goes on 1120S, and then I get a form K1 similar to like a 1099 or W2 that goes on my personal taxes, which I file for.
So with the S corp, I was under the understanding that I can have multiple LLCs under this one S corp.
You can. So when you do something like that, you will be creating what's called a holding company. I like to look at holding companies almost like investment companies. So this will be the company that I use to, if I need more than one business, this company will own all these layers of businesses that I have.
Like what? So for example, I have Honest Royalty LLC, right? That's basically just J Hill Podcast, and I produce content. I get paid the same one as LLC, right?
Right.
I could be doing consulting, I can be doing recording, I can be doing podcasting, I can be doing merch or whatever.
Right.
So would the Honest Royalty be like the S corp, and then I should break down every business that I do individually as a LLC?
Well, you can. It often depends on what's the goal of, like, what are you trying to build out, right? So, for example, with that, you can do it like if that's the main business, right? That's like never going anywhere. But then outside of that, you find additional revenue streams that could possibly have its own business and LLC around it. Then I would do that. I would make that your what's the name of it?
Honest Royalty.
Honest Realty, or I would make that one the LLC, which will act as this holding company, and you can make that S corp, and then any other business you can then have it own. Or another way would be you automatically create a holding company or a management company or investment company. They're all kind of the same terms interchangeably. That owns every business that you do. For example, I have a business called CWM that owns Eagle Financial Group, which does taxes. Now, CWM, only activity it has is based off the activity that the other businesses has, because it's the investment business that owns every other venture that we'll do. So when I get ready to, like coming up, we're getting ready to start buying accounting firms. So when I get ready to do that, the business that might do that in partnership with somebody or to just go out and do it might be CWM versus Eagle Financial Group.
Why does that matter? Like, explain that to me, because right now I don't have an S corp.
Right.
I just have
LLC.
Honest Royalty LLC, right?
Right.
I just have my LLC, and I do everything, and then at the end of the year, I just file my taxes on that one LLC.
Right.
What is the benefits or I guess takeaways of why I should or shouldn't do that?
So 2 reasons. One is the LLC. When you go to LLC, that means we're probably making a decent enough money to where we can pay ourselves. If we get to the point where we can pay ourselves, and that could be as low as, let's call it $40,000, as low as $40,000 or up from there, we get to save on taxes, because on the LLC you're hit with a self-employment tax of 15.3% on top of ordinary income tax. So what that means is, if let's say I'm making like $80,000, I think my tax bracket will be somewhere like 20%. Let's call it 20% on the conservative side. And I have an LLC, so I'm making $80,000. Most of that is with my LLC, right? So I'm gonna pay, let's say 40 of it is with the LLC. I'm gonna pay 20% on top of 15.3% on my overall $80,000 because of the tax bracket.
So 50% basically?
Almost, right? So I'm gonna pay 20% plus 15.3%, which is around 35%.
Yeah.
Right? So when I do S corp, what happens is I get to save on the 15.3%. The kicker though is you gotta be on payroll. And when you on payroll, the payroll taxes you would then pay, they become a tax write-off. They're deductible. So you save money overall with that. The second reason is asset protection. You want to get an entity that layers you and protects you from outside threats and creditors, basically. And so it doesn't, and it also, probably a third reason will be conduct some form of privacy, right? But then, privacy and asset protection gets a little tricky on how you kind of see it. So a lot of people might tell you, might hear online like, yeah, get this company, hide your, protect your assets, this, that, and the third. And it does, but it still layers to asset protection.
Okay. Wait, so, bro, this is a lot.